So as I was finishing up the Monday afternoon market recap, I realized I hadn't referenced the US dollar index nor gold or silver. From time to time, I like to speak about these because they are heavily followed in the investment world and also in the trading world. The US dollar today saw the bullish continuation up from its most recent setup. We were calling this over the weekend either one of two situations or scenarios which could play out. Either we're going to rally back into this neckline of the double top and we're going to find ourselves range bound in a type of channel scenario between support and resistance indefinitely until the bullish trend broke out. Or in fact, we could have been setting up a bull flag. That was really scenario 2. As at the close on Monday, you can see what has occurred during Monday's trading session. The US dollar pushed up and it appears to be breaking out of what we call a bull flag. This is really the continuation of the bullish trend. As such, we have this trigger here about 98.06 on the index itself, just indicating that the price of the US dollar wants to continue in the macro bullish trend up to this most recent resistance level, right around that 100 level. You can see how this has obviously influenced silver and gold. In the pre-market today, let me just make sure I bring up the right ETF first, SLV. I was reading discussions, media reports that the SLV index was going to gap up and there were trades taking place at $17 on the ETF itself. I found this interesting. It didn't occur as such. We saw it gap up to about 16.24, but you can see the selling pressure on the daily candlestick of silver. The net movement, it was bullish. I mean, it was up 0.01 of a cent. And what is most interesting about this relationship right now is that even on this bullish influx into the open of Monday's trading, it was sold throughout the day. We closed more or less where we finished Friday's trading session. And I want you to pay attention to the relationship between silver, gold, commodities markets for that matter in regards to the US dollar. What I'll do, I'll bring up the gold ETF as well. You can see it gap up, but you can see the continuation of the selling pressure and the increase in sell volume. As the US dollar continues to appreciate in value, write this down. It is going to reflect selling pressure, or the counterpart of the bullish movement in the dollar is going to result in unfavorable trading conditions for both gold and silver. A lot of people right now, again, are looking at the price of gold and silver and seeing just how depressed it is. You can see that we've been in a bearish trend since the highs in 2011, and they're just looking at the chart saying, wow, I mean, this is on discount at the moment. Yes, it is if you're a very, very long-term investor. I mean, if you're looking at holding gold and silver indefinitely, maybe for 20, 30 years, depending on when the next commodity cycle takes off. But as a trader right now, as I look at gold and silver, yes, it's cheap. I understand that. But from a buy point of view, or looking at this as neutrally as possible and trying to understand at least where a good buy opportunity takes place on this chart, you really need to pay attention to the US dollar index. When this market turns around, when the US dollar peaks, it finds resistance and it reverses its current bullish trend, that is when, at that moment in time, that is when gold and silver are going to begin appreciating in value. You can see also the relationship between the US dollar and how much it costs to put gas in your car. I speak to a lot of people in the US and Canada who've told me, I believe, that they've paid in the past maybe 2 months gas prices as low as $1.60 a gallon, and right now it's up about $2.80. Don't take my word from it. We price our gas or our fuel in Australia differently. It's per litre and it's not done on the US dollar. But all I'm trying to say is that the fluctuation in gas prices and commodity markets is due to the movement in the US dollar. Obviously, we've been in a bullish trend. As the US dollar depreciated in value, it lost its purchasing power. The price of fuel increased. Now, as this bull market continues in the US dollar, gas prices should technically come down. Pay attention to it at the browser. Just pay attention to it. Keep a track on gas prices and use it as a thermometer, at least, for how the US dollar is moving. Obviously, oil, gas is priced in US dollars per barrel, and as such, you can buy more or buy less based on the actual value of the US dollar itself. So I just wanted to draw those parallels between silver, gold, and the price of gas at this particular moment in time. It's something which doesn't get enough media attention, but it's also simple, and it's mapped out in this relationship which I am showing for you on this Monday afternoon. Take a snapshot of the price of gas here and then say, look, if the US dollar revisits this 100 level on the index, compare it to what gas is at this particular time in the future. I can almost guarantee that the price of gas will be less than what it is right now at this particular juncture. Okay, so I just wanted to bring that to your attention as at that Monday afternoon. Have a great evening, everyone. If you want to comment, if you want to send me an email, please do so. You can find my email address in the link below. Other than that, have a great evening, everyone, and I'll see you most likely either Tuesday or Wednesday for another market recap. All the best. Goodbye.